Time to shift gears then. It's been a strong quarter for KPIT Tech. Sachin Tikekar is the president and joint managing director of the company, now joining in. Thank you so much for taking time out. Sachin, you have delivered a year-to-date organic cross-currency growth of 24% on a 9-month basis, and Q4 as well is seasonally strong. Is it fair to say that you're going to beat your FY23 guidance then of 23%?
Good morning to you, and pleasure to be here. What we have done is at the beginning of the year, we have given a guidance of 18 to 22%. And last quarter, end of last quarter, we increased that to 23. And now we've upgraded that to 24%. So that's what we are calling at this point in time. And, we'll continue to do our best.
When we just talk about KPIT Tech, it's a very different company. It caters to, a lot of auto players, a lot of other kind of players versus some of the other listed names. So, could you fairly give us an outlook? What sort of client, commentary you're getting in terms of the demand going into the next, say, if not the quarter, maybe the calendar year?
Absolutely. As you know, our focus is only on the mobility. That means we work only with passenger car OEMs and truck makers across the globe. That's the only thing that we do. And as you know, the macroeconomic picture as we get into this calendar year, it's still a little bit shaky across the globe. Having said that, what all the automakers and truck makers are doing is they're investing in what you will call software-defined vehicles. That's exactly what KPIT does. So given, in spite of the uncertainties that we see, where the OEMs are cutting cost on the operation side quite a bit and making sure that they have enough cash, not only to weather any storm, but also to continue to invest in software-defined vehicles. So that puts us in a very positive sort of frame of mind as we look at the rest of the calendar year. Does that answer your question?
In terms of Q4, it's seasonally one of the strongest quarter that the company has. So considering the 9-month number that you have already given, do you believe there is an upside risk to the guidance? Would you be looking to change that on the higher side?
We just changed the guidance from 23% to 24%. We'll stick to 24%. And seasonality in our industry when it comes to mobility, there is not much that you actually see. It's fairly, sometimes it depends on the programs and when they start and when they sort of end. That's why it's kind of the kind of seasonality that you see in IT industry, not so relevant from our perspective.
Sachin, let's talk about the margins, because despite big growth in revenue, the margins have largely remained, flat at around 18.5 mark, or I should say steady, right? Is there a target in mind to move it beyond this 18% range to say 20 or beyond 20?
Fair question. And if you look at the last 8 or 10 quarters, every quarter we have had profitable growth and the margins have also expanded. Having said that, last quarter, this quarter, the margins are similar in spite of fairly high growth. And there are reasons for that. One is we have had acquisition cost. We acquired Technica last month, and that sort of had an impact. And next quarter also, there are certain investments that we need to make. That's why we are calling out our margins will continue to be between 18.5 and 19 in Q4. Having said that, there is, because of the growth, there is shoulder room to expand our margins. And as we increase our margins, it's important for us to continue to make investments in the cutting edge technologies. From that perspective, if you take a midterm view, we want to get to 20%. But we'll do it very mindfully. We want to strike the right balance between margin expansion and continuous improvements in the investments.
You've had record deal wins this quarter. I wanted to understand whether it's the existing clients, like a Renault, or are there new ones that you're adding as well? And overall, what's the pipeline looking like?
Our pipeline is looking better than ever. I think quarter on quarter, it's increased substantially, and that gives us confidence as we get into the next financial year and next quarter. So that's the positive news. And also in terms of clients, our focus is actually continue to work with handful of OEMs, go deep and wide. We don't add that many clients. In fact, we've decided to disengage with some of the clients and focus on the key OEMs that are taking more of a strategic partnership approach. And we believe that that way it helps us to focus on them, create substantial value, and as an outcome of that, we get highly profitable growth. So we look at maybe adding 2 or 3 clients every year, but we also let go of a couple of clients at the same time. The point here is to do more with less.
Thank you so much, sir, for taking out time for us. Always good to get perspective from you on